Dubai's real estate market continues to shatter record after record, year after year. Each year outpaces the last, with growth like we've never seen before. The surge in demand, rising prices, and a flood of investments have sparked questions. Is this rapid growth sustainable? Is this a bubble? Or is this the dawn of a new era in Dubai's unstoppable growth? Hi, I'm Hamza from Experience Realty, and today I want to answer a question I'm being asked more and more frequently by both new and seasoned investors. Is it still worth investing in Dubai? If so, which project would offer the best returns? Before we start, I would request you to please subscribe to our YouTube channel and download our PropTube app to stay updated with Dubai's real estate market. Since 2021, Dubai's market has delivered unprecedented performance. In 2021, sales transactions topped 151 billion dirhams, surpassing the previous record set in 2009. By 2022, this became a thing of the past as transactions hit approximately 91,000. 2023, we saw a further 47% increase in transaction volume, totaling 133,000 deals and a value of 411 billion dirhams in sales. 2024, Dubai surpassed its own success again, with 217,000 transactions worth 526 billion dirhams. So, what do these numbers tell us? Just because the market is consistently breaking its own records, does that mean it's the right time to invest? I'm not here to give you the answer you would expect, because that would not serve you or me well. I am here to help you get your answer to this ever-blooming question, and then it's for you to decide whether you want to dive into this vibrant market or would you rather watch from the sidelines. So, let's embark on this journey together. Along the way, we will explore a few key points: the current state of the market and trends, Dubai from a global standpoint, where is the market headed, property types and investment opportunities, developers and developments to consider. Let's start by understanding why this question has become so common. We're seeing massive growth in Dubai's real estate, but the data tells an even deeper story. In 2024, 37% of total transactions were for ready properties, accumulating to 80,290 transactions, which represents a 34.2% year-on-year growth. This tells us two key things. Ready properties are high in demand. The resale market is thriving with more and more investors and buyers snapping up completed properties. Investor confidence in off-plan developments is rising. Investors are increasingly getting confident in off-plan projects, believing that these properties will offer high returns once completed. This growing confidence is further confirmed by the 2024 data, which reveals 110,000 new investors entered Dubai's real estate market in the year. This trend paints a picture of a market with strong fundamentals, attracting both home buyers and investors alike. But the real question remains, is it still worth investing in Dubai today? To answer that, we need to take a look at where the market is headed. As of December 2023, Dubai's real estate market had reached an all-time high in pricing, surpassing the previous peak achieved in 2014. Naturally, when prices hit this point, there was a concern in the minds of many, and they chose to declare that this is the top. This is where it stops and the market will soon begin to decline. But over a year later, prices have risen by another 20%. So why are investors still diving into the market when we've already crossed the previous peak? The answer lies in some fundamental changes that Dubai has experienced since 2014. Advancements that make the city unrecognizable in the best possible way. If you've been to Dubai recently, you've probably seen the transformation firsthand. If you haven't visited since 2014, well, you're in for a big surprise. Let's look at 5 prominent changes that have shaped Dubai over the last decade. 1. Expo 2020 and global attention. In 2014, Expo 2020 was just a dream. Fast forward to today, Expo 2020 has become a reality, attracting 24.1 million visitors from 192 different countries, putting Dubai firmly on the global map. Population growth. Dubai's population has surged by 61% from 2.35 million in 2014 to 3.8 million today. Even more remarkable is the rise in the number of millionaires, with the number of high net worth individuals increasing by 178%, reaching over 72,000 millionaires living in the city today. A more business-friendly Dubai. 2014, entrepreneurs could not enjoy 100% ownership of the mainland businesses. Today, Dubai has eliminated those restrictions, creating a thriving business hub where global entrepreneurs can fully own and operate their businesses. And Dubai is a tourism powerhouse now. Dubai's tourism industry has nearly doubled since 2014, further solidifying its position as a global hotspot for travelers and investors alike. Dubai now offers a variety of visa options: golden, blue, green visas, and more, attracting global talent and investors. As of 2024, the city has issued 158,000 golden visas, fueling the city's future growth. These advancements in Dubai, along with the wider UAE economy, are propelling it forward. In fact, His Highness Sheikh Mohammed bin Rashid Al Maktoum recently called 2024 the UAE's most remarkable year for economic growth, with over 140 international agreements signed in sectors such as sustainability, technology, and clean energy. Dubai is positioning itself as a future-ready global player. Moreover, 200,000 new businesses were registered in the UAE, and astonishingly, 87.5% of which were owned by expats and international entities. This influx of businesses is driving job creation and will increase demand for real estate. Dubai's position as a global trade and business hub has been further strengthened by 24 economic partnership agreements. When we compare 2014 to 2024, it's clear that the growth of Dubai's real estate market is intertwined with the city's broader economic success. This dynamic economy is fueling the real estate market boom and ensuring long-term sustainability. Well, here is something important to consider. Dubai's real estate market is becoming more global with each passing year. It used to be heavily invested in by specific nationalities previously, but today over 200 nationalities have invested in the market. Why is this happening? Well, are people flocking to Dubai simply because of the media hype? I believe this is highly unlikely, and investors are being drawn by the undeniable potential of the city. In my opinion, the most significant factor driving global investments is the combination of Dubai's real estate and lifestyle offerings, paired with its relative affordability compared to other major cities around the world. Yes, you heard that right. Dubai is actually affordable when compared to global real estate powerhouses. In 2024, Dubai's average price per square foot was $406. While this may seem high at first glance, let's compare it with other prime global cities to see where it actually stands. In New York, for example, prime real estate is priced at around $2,700 per square foot. London trades at over $2,800 per square foot, which is 6 times higher than Dubai. In Singapore, prices hover around $2,900 to $3,000 per square foot, and Tokyo stands over $1,500 per square foot. And when we look at Hong Kong, where prices reach up to $4,222 per square foot. And these numbers don't even account for the taxes and the registration fees, which in certain cases can go up to 60% for foreign buyers in some markets. Now, let's look at the affordability. UBS, a multinational investment bank, conducted a study comparing how many years it would take a skilled worker in each of these cities to afford a 60 square meter or a 650 square feet apartment in the city center. And here is how it stacks up. Dubai, it would take just 5.5 to 6 years to afford such a property. In New York, it would take roughly around 9 years. In London and Tokyo, it would take 12 and 14 years respectively. And in Hong Kong, it would take a staggering 22 years to afford such a property. These numbers tell a clear story. With Dubai's growing economy and high per capita GDP, the number of homeowners in the city will continue to rise in the coming years. Next, let's talk about something crucial for any real estate investment, which is the rental yield. Dubai has long been known for its high rental yields, and today, a property in Dubai can pay itself off in less than 10 years, which is one of the quickest in the world. When we compare this to other global cities, in New York, it would take around 20 odd years. In Tokyo, London, and Singapore, it would take 30, 31, and 32 years respectively. And in Hong Kong, it would take around 39 to 40 years. What does all this data suggest? Quite simply, Dubai offers unmatched investment potential. A much known survey done by Knight Frank found that 44% of millionaires across the globe are highly interested in investing in Dubai's residential real estate. And interestingly, the proportion of such people increased as their net worth increased. Did this really translate into market performance? Absolutely. In 2023, there were 431 transactions for properties worth over $10 million, and this was the highest number of transactions for such properties to be done in Dubai ever. In 2024, not to my surprise, these transactions grew by 35%, reaching 582 transactions. Dubai has firmly established itself as the world's busiest market for $10 million plus homes. Some might look at these figures and wonder if this growth is sustainable in the long term. And to answer that, we must consider the solid plans and facts laid out for the future. In 2021, His Highness Sheikh Mohammed bin Rashid, the ruler of Dubai, introduced Dubai 2040 Urban Master Plan, also aptly known as the Vision 2040. In 2023, the D33 Economic Agenda was unveiled. It is important to note that these plans are not the first of their kind. In fact, the 2040 Urban Master Plan is the seventh such initiative, and the D33 agenda builds upon 4 previous economic strategies. The success of all of these previous plans so far provides solid assurance. For those who look at the past for the confidence in the future, this history is a great indicator. Well, we won't go into all the details of the Urban Master Plan and the D33 agenda, but we'll touch on some key points that suggest Dubai's real estate market will continue its growth in the coming years. For any market to thrive, and particularly for real estate, there must be growing demand. Real estate demand is directly proportional to the population growth. And according to the government's plans, Dubai's resident population is projected to reach 5.8 million by 2033 and 7.8 million by 2040. Currently, the population stands slightly over 3.8 million, meaning that Dubai needs an average of 235,000 new residents annually to meet its target. This may sound like an ambitious number. Well, Dubai has already welcomed over 1 million new residents in just under 4 years, an average of 250,000 plus people per year. And Dubai's demand for real estate isn't just driven by the residents. The tourism sector also plays a significant role, and this is why more and more international investors are looking to take a piece of this market. Dubai aims to become the world's most visited city. In 2024, Dubai welcomed around 20 million overnight tourists, and by 2031, this number is expected to double to 40 million. Supporting this vision, the government is investing heavily, approximately $35 billion in expanding the Al Maktoum International Airport, aiming to make it the largest in terms of capacity as well as cargo. And the target of passenger capacity is 260 million passengers annually. Alongside this, Dubai is positioning itself as a 10-day tourist destination, which basically means it will undoubtedly boost the occupancy rates of hotels, holiday homes, and Airbnbs, which will further strengthen the real estate market. Moreover, we also have the region's first casino opening up in Ras Al Khaimah, which is around an hour's drive from Dubai. Once ready, the casino will become a top choice from people from wider Asia, Russia, and Europe, all of which is just under 8 hours of flight time to Dubai. And recently, we have been seeing a surge in interest from investors belonging to these countries and these regions, which would continue to rise as more and more people continue visiting the city. Now, let's talk about affordability. For the real estate market to maintain its momentum, the economy must continue to grow in a way that enables new arrivals to afford both rental as well as purchase options. Currently, Dubai sits among the top 10 cities when it comes to the number of millionaires and centimillionaires. And the number of centimillionaires is expected to increase by 150% until 2040. Well, the government plans to double Dubai's economy by 2033, with trade, logistics, and tourism being the primary contributors to this growth. But it's not just about growth. Dubai is building an economy for the future. Initiatives like sustainability projects, smart cities, and relaxed cryptocurrency laws are positioning Dubai as a global hub for innovation and business. This isn't just a city growing for growth's sake. It's a city with a forward-thinking vision for a long-term relevance. If you've been following along, I hope your perspective on Dubai's real estate market is a bit more positive. You might now be thinking, well, if the market is doing so well and the future looks so bright, will I make great returns no matter where I invest? To answer that, let's break it down. But first, I must emphasize that these insights are based on my experience over the years, and I encourage you to do your due diligence and consult with your advisors. That said, let's explore how to select the right investment for you. Well, we'll break this down into key considerations and go over each of these briefly. First one, ready versus off-plan investments. The second would be top areas and trends to follow. The third, which developers to consider. And fourth, what payment structures to opt for. When entering the market, one of the first questions on every investor's mind is whether to go for a ready property that will generate immediate rental income, or an off-plan property which is still under construction or in certain cases is only conceptualized. This question is a natural occurrence because many investors, especially those who are international investors and have just started exploring the real estate opportunities in UAE, the concept of buying off-plan or under construction is unique to them. Off-plan properties may not generate immediate returns, but they allow for more strategic investment as well as with various options to grow wealth over time. In Dubai, the off-plan market is particularly strong, with 63% of all transactions in 2024 being off-plan properties. Well, there are several reasons why people choose off-plan investments. For example, better pricing compared to ready properties, interest-free payment plans, and newer developments with modern designs and new trends offering better lifestyle options that attract high rents as well as higher resale values. Now, let's look at some numbers to get an idea. For example, a 2-bedroom ready apartment in Dubai Hills Estate is priced between $1.1 million to $1.2 million today, which offers an annual rental income of $63,000, which is a 5.2% yield. Meanwhile, a similar off-plan property of a 2-bedroom apartment in a project called Hills Edge in Dubai Hills Estate is priced at $780,000 to $790,000, which is 29% lower than the ready property price. And if the rental prices in this area of Dubai Hills Estate continue to rise at just 10% per year over the next 4 years, instead of the 17% year-on-year growth it has been seeing over the last 3 years, once the off-plan property is completed, it would generate a rental yield of over 11%. Now, let's compare some numbers for the townhouse and villa segment. A 3-bedroom townhouse in Emar's Arabian Ranches 3 is priced at approximately $975,000 and generates $50,000 in rent, which is again a 5.1% rental yield. On the other hand, an off-plan townhouse in the valley by the same developer Emar, which is by far the most family-friendly residential community ever to be proposed in Dubai, is priced at $789,000 only, which is 26% lower than the townhouses and Arabian Ranches 3. And therefore, it offers great potential for appreciation as well as rental returns. This data provides a clear idea of which investment offer better money-making potential. So, if you are now comfortable with off-plan investments, or let's say you are still keen on buying a ready property for your own reasons, the next thing to understand is what property type should you be investing in. Now, to understand and to answer this, it is crucial to see the demand and supply trends, and that is essential for making an informed investment decision. Current market supply of ready properties shows that villas comprise 6.7% of the total supply, townhouses 7.9%, and clubbed together they are 14.6% of the total supply. Now, if we look at the property supply which is going to be handed over and has already been announced, which will get handed over until let's say 2030, villas would still have the smallest proportion at 6.5%. Townhouses would jump up to 12.8% of the total supply, and combined together, this still sits less than 20% of the total market supply. To make this even more interesting, the recent demographic shift in Dubai's population shows that more and more families are moving to Dubai and calling it home. Therefore, the demand for larger houses is also substantially increasing. Over the last couple of years, major developers announced many new launches within this segment of townhouses and villas, but yet the number remains low. Well, unlike apartments, for villas and townhouses, developers must create entire communities, not just standalone projects, and to be able to provide the lifestyle that the residents crave for, it takes a lot of time and effort. Within both the villa and townhouse segment, there are multiple offerings, but my top considerations are: first one, the Valley, a phenomenal master plan being developed by the largest developer MR, and it is being built with family living at its core. The next one would be the Acres, a master plan which is LEED certified, focuses on sustainable and green living, and provides a very interactive community living experience. Thirdly, Oasis by MR, the epitome of luxury living coming up towards the south of Dubai, which will eventually become the center of luxury living in Dubai. And fourth would be Palm Jabal Ali. Waterfront living in Dubai does not get better than Palm Jumeirah, which is a fact. And now the same concept at a larger scale is coming up at Palm Jabal Ali. Then we have two new master plans coming up by MR called the Heights Wellness and Country Club and Grand Polo Club and Resorts. These have been on the radar of every investor. Now, this does not mean that one can only invest in villas and townhouses in Dubai, otherwise there is no money to be made. There are some phenomenal investment opportunities in the apartment segment as well. But in this segment, selecting the right property becomes even more crucial. For apartments, my basic premise is to go for projects in master communities, where in either all of the supply or majority of it is controlled by one particular developer. Now what that does is, because a large-scale reputable developer would never bring in too many properties within one particular area unless there is enough demand for it. In a multi-developer area, supply is within the hands of multiple developers, and each developer has their own benefits to look at. So when it comes to apartments, my top considerations are: first one, Maritime City by Omniad, a high-rise waterfront destination within the heart of Dubai, offering a rainforest vibe within the sea. That's very unlike Dubai. Second would be Rashid Yachts and Marina. Sitting right across Maritime City, this low-rise residential community by MR is a Riviera-themed family-friendly community, the first of its kind in Dubai. Third, Dubai Creek Harbour. For those who missed out on the opportunity of investing in downtown Dubai in the early 2000s, they can be glad that an opportunity of the same magnitude still lies within this city and in close proximity to the downtown. Fourth would be Dubai Hills Estate. It has been an investor and homeowner favorite post-COVID and continues to be one of the most transacted communities in Dubai. Fifth would be Expo City. Towards the south of Dubai, this is a community unlike any other and offers great investment opportunities, as this would become the financial and exhibitions district of Dubai in the future, similar to what we see in the DIFC and the World Trade Center area today. Sixth would be MR Beachfront, the Little Miami of Dubai, and Palm Jabal Ali, the successor of Palm Jumeirah. For those looking for an exclusive destination to invest in, should not leave either of these areas. Now, even though we have understood the segments to consider and some developments to keep an eye out for, we need to assess and understand which developers to actually work with. As of now, we have more than 350 registered developers operating within Dubai's market, and this number continues to grow. Hence, new developments come to the market regularly. Therefore, differing pricing structures, payment plans, and product types are being offered to the market, and clients are being attracted to all of these offerings. However, selecting the right developer in this entire process is of utmost importance. One must assess the history of the developer, their reputation, reliability, and investment potential it offers today and has been offering to its investors since day one. It is always safe to work with developers which are backed by the government, as this gives an added sense of security to the investors. Amongst the government developers or government-backed developers, the first name that comes to my mind is MR, which without an inch of a doubt is the biggest developer not just in Dubai, but in the world outside China. MR was given the responsibility by the government of Dubai to start off the freehold real estate market. And if the government chose this developer as its beacon, then one must not ignore them at any point. Till date, MR has produced multiple master plans and communities which are rated highly by investors from across the globe. Some noteworthy developments would include Emirates Living, Arabian Ranches, Dubai Hills Estate, and obviously downtown Dubai and the Burj Khalifa. Next would be Dubai Holding, which now comprises of Nakheel, the creator of Palm Jumeirah and the upcoming Palm Jabal Ali and Dubai Islands. It also comprises of Dubai Properties, the force behind beautiful residential communities of Moudon, Serena, and Villanova. Miraz, which is the creator of the beautiful Blue Waters Island, City Walk, an urban masterpiece, and the exclusive Jumeirah Bay Islands. And it also includes Maidan Group, the one to bring the concept of lagoon-based communities to the city of Dubai in the form of District 1. Well, another name added recently to the government-based developers is Expo City, the developer given the responsibility to create the most sustainable and futuristic living experience in the south of Dubai. Moreover, Omniat, a private developer which has created a name synonymous with luxury real estate in Dubai. Omniat was chosen by Dorchester Collection as its partner to enter into Dubai's real estate, and now they are venturing into planning master communities. So one could imagine the kind of community they would be putting forward. Then, DAMAC is a developer you could rely on if you are someone who likes to invest in different or creative concepts. As a developer, DAMAC has a big portfolio under its belt and caters to various investor categories. There are some small-scale private developers too who are bringing great products and investment propositions to the market and offer niche projects. My top choices within this category would be Iman Developers and Ellington Properties. Now, let's dive into the payment plans that are being offered in the market. There are many different modes of payments available to clear off payments for properties and multiple payment instruments too that can be used. For ready properties, you would be required to pay in full in most cases, and this can be done via cash in the form of a manager's check and via bank mortgages. Now, when it comes to off-plan properties, the payment structures could vary anywhere between paying 50 to 90% during construction and the remaining to be paid off either on handover or over multiple years post-handover. Payment structure that works best for you certainly depends on your cash flow and what product category you want to tap into. For example, if you want to be investing in projects where at no point you have a lot of supply on the resale market, then you should work with payment models wherein the majority of the payments are being taken during the construction phase, as this allows you to operate with deep-pocketed investors who are committing to properties with the intention of holding on to their investments. However, if you are someone who does not want to allocate too much of your funds during the construction phase, then a 50-50 or a 60-40 payment plan is better, as you would be able to finance the handover payment through a bank if needed. Lastly, if you are someone who wants to purchase a property without allocating too much funds during the construction period and do not want to involve a bank either, in that situation, a post-handover payment plan would be better for you. However, in most cases, if not all, properties with such payment structures tend to give the least capital gains but allows investors to pay off for the property with more flexibility. So, when we started off with this video, the idea was to assess the strength of Dubai's real estate market and to understand which investment opportunities are to be strongly considered. I have shared my honest assessment of the market while highlighting some of the best investment opportunities in the market today. However, as mentioned earlier, this is my personal analysis and by no means this is the only way to operate in this market. If you are aligned with what I have to say about the market and how I assess the market, well, you can always reach out to me on the number provided on the screen and we can go over any and every question that you still might have.